Hello everyone and welcome to this presentation on the correct way to trade candlesticks. Welcome, my name is Stephen Primo. I am the president and founder of Specialist Trading, and today I want to speak to you about specifically what I feel is the correct way to trade candlesticks, because they're probably the most popular way in which to trade with bars, second to the standard open, high, low, close bars. But as well, they're used in virtually every market, from Forex to intraday trading to futures trading. I've been trading them for nearly 40 years, but I discovered along the way, which I feel is the correct way to trade them. So I'm going to show you today the method in which I feel gives you the biggest odds for consistency using this in conjunction with candlestick trading. And you'll be able to use this as early as tomorrow if you'd like. Now, we are an educational website. As you can see, we basically are sharing with you the insight, the techniques, and the strategies that I've accumulated in my nearly 40 years. I started out trading on the floor of the Pacific Stock Exchange. I was on the floor for 16 years. 9 of those years I was a specialist, or basically a market maker, in roughly about 50 stocks. I traded through the crash of '87 and the bull market that followed after that. So I've been around in just about every market environment imaginable. I know what works in terms of consistency, and I know what doesn't. I know what strategies work. I know what systems actually don't work. I know what techniques have a higher level of consistency. So this is what I do at Specialist Trading. We're really educating you so that you can ultimately take this knowledge and empower yourselves. It's our belief that the reason why most traders fail is because you're relying on someone or something to tell you what to do. I mean, go back and look at your own trading. How many trades did you take because someone said something on TV or in a chat room or in a trade room, or some system just blurted out a buy or sell signal? You're basically just relying on someone to tell you what to do, and that, in our belief, is a recipe for disaster. We feel the only way you'll get on that consistent basis where you can be trading 20, 30, 40 years down the road is by having someone mentor you with sound fundamental education that has stood the test of time, and then releasing you, letting you trade on your own. You don't have to rely on coming back every day and pay for some chat room or trading room to tell you what to do, because you know what to do. This is what we do at Specialist Trading, and this is the way I was taught, and this is the way I teach all of my students. Now, I'm going to show you a great technique, as I stated, for trading candlesticks, but before we begin, we are required to show you this, so I ask that you please take a moment to view our disclaimer. I am going to show you this particular technique for candlesticks, but please remember that we can in no way guarantee that any of the performance results I'm about to share with you will be repeated in the future. Once again, we are required to show you it, so please take a moment to view our disclaimer. And as you are looking at that, I would also like to take this time to invite each and every one of you to follow us on Twitter. If you haven't done so by now, that's our handle there. You may want to copy that down, abbreviation for Specialist Trading. It's at SPCLSTTRADG. Every day I post something different along the way, anywhere from daily financial wisdom to actual signals that our strategies have generated. In fact, just a few days ago, I posted that many of our strategies were generating multiple sell signals in the market. And just with one day going up, I believe yesterday, the markets have come down fairly strongly this past week. So lots of great free information, although it is rather limited because of the way Twitter is structured. So if you'd like to get more information about what we do, or some more detailed information, well, our sister site, Pro Trader Strategies, has a Facebook account at protraderstrategies.com. You can simply go there and you'll see a lot more information, detailed, much more lengthy information, such as videos and different learning tools and instructional videos. So lots of ways to follow us there and to get more information on us. Now, as I stated, we are first and foremost an educational website. As you'll see in this presentation today, I'm not just going to force feed you some system and tell you to blindly take it without you understanding what you're doing. I'm going to show you in detail what the whole process behind this method is. As you can see, my goal here is to teach you, not to trade for you. It couldn't be anything further from the truth. I don't believe in that style of trading where you simply come to my website and I tell you what to buy and what to sell. As I stated earlier, we have strategies that generate signals, but there's a number of ways to trade them. Everyone trades them differently, and we encourage this. So we want you to be a part of the process. So as you can see here, my goal is to teach you how to trade with the Specialist Edge. This is the same edge that turned my trading around when I started nearly 40 years ago, and this is the same edge that I teach all of my students. And today I'm going to be sharing with you an edge about trading candlesticks. But before we begin, Just a few things I want to bring up. First of all, since this is a classroom, if you have any questions, as with all of my presentations, I like all of our students to wait till the very end to ask me any question. The main question is, actually there's two of them. First of all, I just want to make sure that I'm coming through loud and clear and that you're seeing everything, so I'll ask you that. You can simply answer on your question and answer box. And then also, the other question is, most people ask, is this being recorded? Yes, this is. So if you have to leave early, or if you're having technical difficulties with your computer, you can always go to ProTrader Strategies and request a link. Okay, so it looks like everything's coming through loud and clear. You can see everything. You'll hold off on any questions. In about 25 minutes, we'll spend the rest of the time for question and answer. And then once again, if you need to leave early or having difficulties, you can request a link to this recording. All right, so let's begin. And I want to start out by sharing with you conventional wisdom ideas, because most of us are taught right off the bat the way to trade is by using these standard conventional techniques of conventional wisdom. You know, buy low, sell high. Certain techniques are supposed to be applied a certain way. You look at volume a certain way, support and resistance. And this, leads us to ask the questions, does trading candlesticks with conventional wisdom really work? In other words, the basis for candlestick trading, does it really work? Because we're all taught, by either the seminars or the website or purchasing a program, or myself, I met with someone who worked at a bank that traded Japanese currency pairs that used the candlesticks. I met with them and they taught me how to trade them. But after a while, you have to ask yourself, does it really work in terms of consistency? Well, let's have a brief refresher course for candlestick patterns for those of you who maybe don't trade them or haven't traded them in a while. There are a number of candlestick patterns, anywhere from dojis, as you see here, to hammers, to evening stars. There's lots of them. For the sake of keeping this as simple as possible, we are only going to concern ourselves in today's presentation with probably the most standard candlestick pattern, the easiest to recognize, and by far the most popular, and those are engulfing patterns. Okay, so we're only going to concern ourselves with engulfing patterns today, even though the technique I'm going to be sharing with you can virtually work with any candlestick pattern, from dojis to dark cloud covers to shooting stars. It really doesn't matter. But just to keep things simple, for the people who aren't familiar a lot with candlestick patterns, let's just focus on engulfing patterns today. Now, if you don't know what an engulfing pattern is, it's a two-bar pattern, as you see here, bar number 1 and then bar number 2. Okay? It does not matter if this were a daily bar. It wouldn't matter if it's a 5-minute bar or a monthly bar, but it is a two-bar pattern. Now, if we're looking at bullish engulfing patterns, in other words, a pattern with a bullish bias, bar number 1, as you see here, should be a down day. All right? It opens and then closes lower, as you see on the left-hand side. All right? Now, bar number 2 should be an up day. As you see, it opens and then closes higher. What we're looking for is the open to close range of bar number 2 to engulf the open to close range of bar number 1. All right, we do not need to engulf the entire range of the wicks, of the candle wicks. Does not matter. That's not what we're interested in. We're only interested in engulfing the open to close range of bar number 1. Now, if you want to be very, standard, bar number 1 should be down, bar number 2 should be up. But it's been my experience that it really doesn't matter what bar number 1 is. It can be a up day. It doesn't matter. Okay, so for all intents and purposes, though, we'll look at the standard definition. If you see this pattern, a bullish engulfing pattern, regardless of what time frame it's in, well, it's a very strong edge, because most likely you're going to continue with an upward bias for the next 3 to 5 bars. Okay, that's a great edge to have. Now, conversely, if you see this pattern, this is the bearish engulfing pattern. It's just the opposite side of the coin. It's the same thing, a 2-bar pattern. Once again, it would not matter if these were 5-minute bars, tick bars, monthly bars. It absolutely does not make any difference. And what we're doing is we're looking at bar number 1 first. Bar number 1, usually in its most standard format, is an up day, where you open and close higher, as represented by the open candle. Bar number 2, the second bar in the pattern, is a down day, where you open and close lower, as represented by the dark body. All we're looking for is for bar number 2's range from open to close to engulf bar number 1's range from open to close. Okay, the standard format is as you see right here. But once again, I've seen that it really does not matter whether bar number 1 is up. Okay, all we're really looking for is what the direction is of bar number 2, and if it engulfs the open to close range of bar number 1. But if you see the standard format, which we're going to be dealing with today, Well, this is a very strong bias to the downside for the next 3 to 5 bars. So this is a great edge to have, okay? Something to look at, but this still isn't a strategy. It's just a pattern giving you a heads up. Now, let's look at the standard conventional wisdom definition of engulfing patterns. The engulfing candlestick pattern is a reversal pattern. Extremely important, you see here, reversal pattern. So this means it usually occurs at either the top or the bottom of a trend. So in other words, since we are reversing direction, if you see a trend that is going up, you're looking for one of these candlestick patterns that's telling you that the trend is going to reverse and now go down. So obviously you'd be looking for a bearish engulfing pattern because it's telling you that it's going lower. Now, if the trend is going lower and you need some type of reversal indication, well, you're looking for a bullish engulfing pattern to tell you that the downward trend has concluded and now you're going higher. Okay, this is the way I was taught. This is standard conventional wisdom of trading candlesticks. So as we look here in this older chart of CVX, we see here that obviously we are in a downtrend. The price is going much lower. So we're looking for the standard way of finding the bottom, and that's by finding a bullish engulfing pattern. Okay, so what do we have right here? We have a bullish engulfing pattern. So this would tell us that we should be buying, right? We have a strong edge that we will continue in an upward direction for the next 3 to 5 bars. And most likely, since the standard definition is saying that this is a reversal pattern, well, this trend is probably over, right? So we jump in and buy, and look what happens. Look familiar to anybody, okay? This is the way I used to trade candlesticks. It would work every once in a while, and then something like this would happen to me. But then I think, well, maybe I jumped the gun too soon. Maybe this is the end of the trend because, lo and behold, we're met with another bullish engulfing pattern. So I just got in a little bit too early. So I'll double up my position and I'll buy some more. So I would buy thinking that I'm really going to make a killing now. And then guess what? It would go even lower. Okay? So after trading this way for a while, I would see that there really was no consistency in conventional wisdom of trading candlesticks. They really did not have this consistency that I was looking for. Sure, they would work every once in a while, but it was always the next couple of trades, as you see right here, where I'd give everything back. So we have to ask ourselves, how do we increase our odds for success? Because after all, a great number of people trade with candlestick patterns, and obviously they do work. But how do we increase our odds for success? Well, after 40 years of trading, I ultimately found out that the way to do this is to trade candlestick patterns in sync with the trend. You see, we've always been taught the opposite. We've always been taught that we use them as reversal patterns. And in my nearly 40 years of trading, it's actually the opposite. They work much better, regardless of what candlestick pattern you're looking at, but they work much better if they're traded in sync with the trend, as opposed to trying to find a bottom or a top within a trend. Okay? You're going to have a higher level of consistency if you trade any candlestick pattern in sync as opposed to out of sync with the trend. Now, this brings us to the question, well, how do we find the trend? Because everyone has a different idea, a different technique for telling us what the trend is and how we should find it. Okay? Well, here are a few trending tools that we want to share with you so that you can start using this as early as tomorrow. And they're all, adequate and good tools. In fact, we use some of them in our strategies and in our techniques. But let me share with you what they are. And you can, once again, write these down, or this is recorded. You can watch this later on. First one, obviously, is indicators, and probably the easiest indicator would be a moving average, okay? A lot of people like to look at 20-period moving averages, so if that's rising or if it crosses, say, a smaller time frame moving average, that tells you you're in an uptrend, and vice versa, okay? So this is a fine tool to use to tell you if you're in sync with the trend or what the trend is. Another technique is patterns, okay? So what you want to look for are, when you're looking at the chart, are higher highs followed by higher lows. This tells you that you're in some type of stairway or a kind of a stair-step pattern where you're going higher and higher. Now, conversely, if you're in a downtrend, you want to see lows followed by lower highs, all right? Kind of a stair-step to the downside. This is telling you you're in a downtrend. Once again, a valid way and generic way of discerning what the trend is. Lastly, people like to look at time frames, although we don't teach this style at Specialist Trading. A great number of our students use this, And what they like to do is look at a higher time frame, let's say a daily time frame, to tell them what to do on a smaller time frame, such as that hourly or even 5-minute time frame. And they have to be in sync with each other. If we're looking at two different time frames and they're both in sync, this is telling us that, in terms of the direction they're going, the current direction, this tells us what the strong trend is, okay? So there you have probably the three most basic and popular ways to find out what the trend is. Once you use these and apply any of these to your trading and you feel confident enough that you really are in sync with the trend, then you just look for candlestick patterns that are in sync with that direction, okay? So if you're in an uptrend, obviously you don't want to be selling. You want to be looking for bullish candlestick patterns. If you're in a downtrend, you want to be looking for bearish candlestick patterns, okay? That's the way it works. We do not want to be out of sync. The trouble is really having something we can rely on and depend on to tell us that we're really in sync with a trend. Because many times these tools are lagging indicators or lagging tools. So we will get in once we think we've found out what the trend is, and then it's too late. Then it starts turning around. So how can we feel confident that we really are in sync with the trend? Well, by using probably the best trending tool I have used in my nearly 40 years of trading, that's the PET-D. Okay, you've heard me speak about this many times before in my presentation, and what it is, it's a proprietary algorithm where we've colored the bars. All right, if you see a series of green bars, you're in an uptrend. There's nothing you have to figure out. There's no higher time frames you have to look at. There's no other moving averages or patterns. All you want to do is just look at the color of the bar. If you see a series of red bars, you're in a downtrend. Okay, that's simple. Now, when I first started using this on the floor, I just used this to tell me what the direction of the trend is. But we can even take it to higher levels by using it with candlesticks. Let me show you how. Let's say we get a bullish engulfing pattern. Okay, we are only going to buy if the engulfing bar or bar number 2 in that 2-bar pattern, remember where I showed you those 2 bars, if bar number 2 is colored green. So we don't care if the first 20 bars prior to that were red. If bar number 2 is green, that's our buy setup. That's our buy signal to go long. Okay? It's that simple. We don't have to figure out higher time frames. Once again, we don't have to look at a bunch of convoluted indicators. We don't even have to look at news. We don't care about that stuff. We're just looking at what's in front of us, the chart. So if we look at this example here, it's older example in SYY, we see here that this goes against conventional wisdom. Why? Because basically we're going sideways. Someone looking at this would say, Steve, there's no pattern here. We're in a rangy market, kind of going up, back down, back up. So I'm not going to do anything because you never trade a rangy market. That's how you get whipsaw. Okay? But what happens is that we have a bullish engulfing pattern right there. Okay? Now we've always been taught that you only use bullish engulfing patterns at the bottom of a downtrend. Well, there's no downtrend here. We're just going sideways. So most people would just bypass this trade and say, no, this is not valid. This is not the way I was taught. But we don't trade that way anymore. Remember, there's no consistency to using conventional wisdom. All we want to do is apply the color bar tool, the PET-D, and make sure that bar number 2 in this 2-bar pattern is green. If both of them are green, that's even better. But all we need is for bar number 2 to be green. So let's add the PET-D. Guess what? It's green. So where everyone probably would have bypassed this trade, we take it, and 5 points in 1 week. You see how the market is giving us clues all the time, but we rely on outside sources, either some trading guru or some conventional wisdom that we were taught that we're supposed to be trading, or someone in a chat room telling us what to do or what not to do. And it keeps us out of a lot of winners, or it puts us in a lot of losers. The only thing we should be listening to, what my mentors taught me over 30, 40 years ago, is to listen to one thing, and that's the market in front of you. Because most of the time, I'd say a good 80, 90% of the time, it tells you in advance what it wants to do. Our job is just to learn how to listen. So that's what my job is, teaching you how to listen to the market. Now, let's say we get a bearish engulfing pattern, okay? Well, we're only going to take that bearish engulfing pattern, a sell pattern, if bar number 2 in that 2-bar pattern is colored red. All right, we don't have to look at news, we don't have to look at fundamentals, we don't have to look at anything else. We just find a bearish engulfing pattern, and then we want to see if bar number 2 is colored red. So now once again in this older example here, we see in DVN, we see, well, we're in a downtrend, right? So conventional wisdom tells us that we should be looking for a reversal. We want to look for bullish candlestick patterns or bullish engulfing patterns. So we're in a downtrend, and what do we see here? We find two bearish engulfing patterns. So we were always taught, no, that means you should be selling at a top. We're obviously not at a top, so we don't want to take these if we were trading the standard way. But we don't trade that way anymore. I stopped trading that way a long time ago. We want to trade in sync with the trend. So let's see what the trend is. Well, all the bars are red, so the pet D is telling us the trend has been down for a long time. You should be taking these trades. So if you did, look what happened. You see how the market is telling you what it wants to do? The reason why we mess up so many times as traders is because we try to fight it. We try to pick a bottom, we try to pick a top, we try to say, well, this is where it's going to stop. This is the exact top or this is the exact bottom. It's silly. Why don't we just go with it? It's a lot easier. All right, so let's say you took that trade. You're a little scared, but you take it and you go, boy, that works pretty good. But you know what? I don't want to go to the well once too often. And we've come down pretty far. And guess what I see? I see two bullish engulfing patterns. So we're probably hitting some type of support here. We've got maybe a double bottom. This is good support. You know, this was kind of a lucky trade here. I'll give Steve Primo that. Okay, but you know, gosh, I got two bullish engulfing patterns here. I should go long. I'll cover my short and I'll go long. So let's say you had done that against what I'm trying to teach you today. Well, look what would have happened. Okay? This is why it makes no sense to trade against the trend. Candlestick patterns don't work very well when you're trading them against the trend. I know we've all been taught to use them as reversal patterns, but I've never found consistency that way. I would much rather see a bunch of red bars the way we see here and then look for bearish engulfing patterns like right here, this one. This is the next trade I would have taken, and look what happens. Now, if you had taken the very first couple of trades up here, that would have given you 25 points in 2 months. You could have purchased options. You could have gone short the stock. Or if you don't like to go short, well, you could have used these as points to exit your trade. You know, once you saw you were in a downtrend and you were getting sell signals. So let's look at some recent stock examples. Now that you've seen on these older charts how the technique works, how there really is no consistency when you're trading candlestick patterns the conventional way. I'm not saying it doesn't work. Sure, it will work every once in a while. As I stated earlier, when I was trading, I would get some really nice trades every once in a while. But then I would be followed by trades just as what you just saw here, and I would give everything back. So that's not what trading should be here. We really do not want to have some type of inconsistency on our trading. Rather than have 1 step forward, 2 steps back, we want 2 steps forward, 1 step back. Okay. Remember, once again, for all you people that may have come in late, we're not going to take any questions till the very end. So I'm not even going to open up the question and answer box until we get to the very end. So let's look at some recent stock examples here. Okay. All right, let's start off with HRL. Once again, we see that just off the coming into the mid-November period, we're just basically going sideways. Someone would say, well, there's no trend direction here, Steve. I'm not going to take any trades until we have some clear-cut trend. Okay, that's the standard way. And if you were using indicators or patterns or a higher time frame to tell you what the trend is, you probably wouldn't have done anything because it would have told you you're going sideways. That's the beauty of the PET D. The PET D doesn't rely on any of those things. The PET D is the best tool I know for fine-tuning to find out what the trend is. Especially once you have some type of strategy, it gives you confirmations. Okay, so what we have with the PET D now is we want to confirm bar number 2. So if we have a kind of a sideways range, the majority of the bars here are green. So it's still not telling us anything. But what do we have here? If we're looking at candlesticks, we have 2 bullish engulfing patterns. And both of those second bars, both of bar number 2s are green. So right here, we've had a week of the market telling us, you better get ready to go long because I'm giving you signals. I'm telling you I'm going to go higher. Even though we've been stuck in a 2-point range, the market is yelling, it's screaming out that I'm most likely going to be going higher. This was mid-November. So had you taken those setups, well, it's 12 points in the next month, roughly, coming into the pretty much the end of December. Now, we're not saying that you would have held on to 12 points, but that's how much room you had to work with. That's the consistency we're talking about because you were in sync with the PET D. All right, so you could have taken a point, you could have taken 5 points, 10 points, or if you're lucky enough, you could have taken full 12 points, okay? Now, we get to a certain point roughly around the beginning of January, and then If we go into the first week of January, we see that some of the bars are starting to turn red, and now we have a bearish engulfing pattern. And guess what? Bar number 2 is confirming it. Why? Because bar number 2 is colored red. So if you were still long, this would have been a big, a very big clue that the market was giving you to get out. And if you were more aggressive, you could have even gone short. So roughly in the last week, the market has gone down 4 points, okay? Let's look at FOSL, all right? Once again, it looks like we're going sideways. We add the pet D, and the majority of the bars are red. And what do we see here? We have a bearish engulfing pattern, okay? So this is the market screaming, telling you you should sell. Why? Because in that 2-bar pattern, bar number 2 is colored red. You have a very high level of consistency. Is this guaranteed to work 100% of the time? No, nothing is. And if anyone ever tells you that this works 100% of the time, you should run, because nothing does. I've been trading long enough to know that it's just, it would be unnatural for something to work that well. But remember, we're looking for consistency. You've heard me say this multiple times today. It's all about consistency. 2 steps forward, 1 step back. So we want consistency in our trading. This is what the pet D gives us. If bar number 2 is colored red, well, it's giving you the okay to take that sell signal. And look what happened. Now, you could have taken a small amount here, and if you had gotten out with a small profit, well, don't worry. You always had a couple of other signals here too as well. Or you could have stayed in for the long haul, and once the news came out, could have captured 25 points in just a couple of months. Now, obviously, there was some news that made this stock gap down roughly about 10 or 15 points. Did we know that up here? No. The pet D, though, was telling us we're in a downtrend. So if you're in a downtrend, it's really silly to try and think that you're going to find a bottom. It's just not worth it. You may do it every once in a while, but it's more advantageous to simply be in sync with the trend. That's the beauty of what the pet D gives you. All right, let's look at First Solar, FSLR. As we see here, we've had a really nice run. This is a current chart coming into the beginning of the year. All right, this is, as you can see here, in 2016. But at this point, it looks like we're kind of having a rolling top here. We're starting to roll. We've got a gap right here where we gapped up. Most likely people would say it looks like we're kind of rolling over. We may be coming down, 50% retracement. Maybe we're going to fill this gap. There's all these reasons. Maybe there's some fundamental news about earnings, whatever you want to pick. All right. These are the things that only cloud your judgment and make you doubt your trading. This is why we don't even teach any of those things in specialist trading. Remember, what did I say? We only focus on one thing, the chart in front of you. That's it. We don't worry about news. We don't worry about chat rooms or trading rooms. We don't worry about what some guru was saying on a webinar. It doesn't matter. We just learn to listen to the market. So, what's the market telling us? Well, the first thing is we see 2 bullish engulfing patterns here, but nothing's happened yet. So how do we know whether we should take them? We add the pet D. And the pet D has been green for the last 3 weeks, almost a month. So the market is screaming that it wants to go higher. And as you can see, we gapped up on some news, 6 points in roughly 3 days. Now, you could have gotten out really quickly, but as you saw earlier, in the earlier example, we were in that trade for roughly 2 months, and you could have gained 25 points in your direction. Now you can also use this as a short-term tool to get in and out rather quickly. It's up to you. How about SNDK? Once again, it looks like we're in a range. Okay, most people would say I'm not going to do anything here because we're not at the bottom, we're not at the top. I have no idea what this stock is doing, so I'll stay away and look for something that's giving me more direction. Not true. If we look, we see that, well, we have a mixture of bars, green, red, but we have a bearish engulfing pattern here. Both bars are colored red. So that's all we need to know. It does not matter what happened prior to that. All we need to know is what the color of the bar is for bar number 2. That's it. We don't have to go back and count 20, 30 bars. It doesn't matter. So if bar number 2 is red, the market is telling us most likely it wants to go lower. Okay, this was just a couple of weeks ago. And look what happened. 14 points in 2 weeks. All right, did we know that this stock was going to fall out of bed? No, we were just following what the market was telling us. Verizon, as we can see here in October, the stock was going up. It was very strong and all the bars were green. So should we try and sell this? Should we look for some type of reversal? Absolutely not. That's the way we've always been taught, but there's no consistency to that. So we're only going to look to buy. As long as the bars are green, we're looking for buy setups. And we have a buy setup right here, a bullish engulfing pattern. So had you taken that, that's 18 points in just 1 month, okay, coming into the beginning of December. And you had a lot of chances to get in. That's the beauty of also using these techniques as well, because if you miss the very first one, many times if it's a very strong trend, as you see here, there's a lot of different chances to get in as well. These are all different bullish engulfing patterns. MANH, M-A-N-H, okay, as we can see, it looks like it's kind of in a downtrend, but we're not really sure yet. As we add the PET D, we see, well, the majority of the bars for the past week have been red. So this short term, last week or so, we have been in a downtrend, and we have a bearish engulfing pattern. So if you feel confident enough, you should be taking this trade. Once again, this is the market telling you, I'm going lower. This was just about 3 weeks ago at the end of December. Now, if you didn't take this trade, I mean, I don't know why you wouldn't have. If you thought, well, maybe we're bottoming out. Remember, you said, well, I can't, Steve, we've been going lower. I need a reversal pattern. If you're going to look for that, you're going to miss a great trade, because you could have sold this stock and gained 18 points in just about a month. Remember, we don't follow fundamental news. We don't look at any of that stuff. All we do is look at the market. The market tells you it's a lot cheaper, true, and it's a lot easier. You don't have to try and figure out what it's trying to say, what this earning report means, what this fundamental economic report means. How many times have you seen an economic report, the jobless claims or something on the other side of the world come out, and you think, boy, that's got to be good news, right? Interest rates, whatever, and then the market goes straight down. Or vice versa. You think it's terrible news, and the market goes straight up. We don't want to be trading with things that are too, deceptive, and they're too subjective, where everyone has a different interpretation. We want things that are cut and dry. And what could be more cut and dry than just seeing a color, either green or red? All right, there's no room for any type of, interpretation in that. Now, this also works on the ETFs, in this case, the spiders. I want to go back here to in December, all right? Now, in December, a lot of people were really caught off guard by the market falling out of bed at the beginning of this year. But let's look and see what happened in the spiders. This is the ETF of the S&P index. Middle of December, what do we have here? The market is telling us that we have a bearish engulfing pattern, which has a strong downward bias, and the PET D is confirming it because bar number 2 is red. And then we all know what happened coming into this year. We've all seen the market go lower. Everyone has been saying, why is the market all of a sudden falling out of bed? What happened? Is it China? Is it something going on with interest rates? Is it the elections? What's going on? It's really much easier than that. The market tells you what it wants to do. All you have to do is just listen to it. Don't worry about figuring out why it's going down or why it's maybe going to go up. It's just a recipe for a disaster. Trust me. I used to trade that way. I'm not saying this to be arrogant or condescending. Only I'm saying this because this is the way I used to trade. I used to listen to every news event coming out, and guess what? I couldn't make any money based off of it because it was too difficult to figure out. Until my mentors taught me to listen to only one thing, the chart in front of me, that's when I started to become consistent. So this is what I'm trying to teach you as well. Now, this doesn't just work with ETFs and stocks. We can also apply it to commodities or bonds. We can also look at the 30-year bonds here. As we see, this is a monthly chart of the 30-year bond. This is going back to 2013. Now, back here at the beginning of 2013, we had a bearish engulfing pattern that was confirmed by the PET D, and bonds went lower. But we kind of bottomed out right here at the beginning of 2014, and we had a bullish engulfing pattern that was confirmed by the PET D. And look what happened with bonds. Now, so far, there hasn't been a bearish engulfing pattern that's been confirmed. We had one right here, but it was green. Remember, we need it to be red. And in May of 2015, and then again in January, we had 2 bullish engulfing patterns. So would you try and, be a seller of bonds or think that the bond market is going lower? Not according to this. So you may want to be tracking that. But once again, these are monthly charts, so this is a long-term outlet. We can also use this on commodities and crude oil, okay? Everyone in the world is mystified why crude oil keeps going lower and lower and lower. They can't understand how it just keeps going lower and lower. Sure, there's plenty of fundamental reasons why that everyone can look at in hindsight and say, oh, well, this is what happened. But what if you had known in advance that it was going lower? Well, we look here at this daily chart in crude oil in November, and I know it's going to be going down a lot longer than that for over a year. But even just as far back as the last couple of months, we see here, a lot of people thought it was going to bottom out at these levels right here, okay, at the end of November. Well, what did we have here? We have a bearish engulfing pattern, okay? This was at the end of November, coming into December. And look what happened, okay? This is coming into this past week. Now, had you missed that? Well, look at all the other setups you had to go short. Remember, you never have to feel like, boy, I missed that, it was too late. There's always a lot more in these strong trends. They always give you, the market is always giving you a different chance to come on board. It's always saying, don't worry, you missed that one, I got another one for you, come on board. But most of us we don't know what to look for. We don't know how to listen to the market. We're too concerned about listening to some guy talk in a chat room. There's no consistency in that. Listen to the market and you'll do a lot better in our opinion. Now you can also try this with commodities. Here's a chart in sugar. I personally don't trade sugar, but here's a chart going back to October and November. And as you can see here, in a very strong uptrend, because all the colors were bars were colored green on this daily chart. But look back here at the very beginning of that trend, a bullish engulfing pattern. So you're going to see this anywhere and everywhere. It doesn't matter what market, ETFs, futures, commodities. In fact, let's look at the E-mini S&P now for all you E-mini traders. Now I'm going to go back in time here because I really want to make reference to something that happened last August. Remember in August we had that tremendous sell-off in the market when the market went down roughly about 1,000 points in one day, intraday. A lot of people were mystified. Once again, everyone's always mystified when the market makes these big moves and they say, how did this happen? Where did this come from? And then we try to put the pieces together, of the puzzle and justify it by fundamental news or by the hedge funds or by this, high-speed trading. They're the ones that did it. We always have to look for a reason. But the beauty is you don't have to do that when you just listen to the market because the market tells you mostly in advance what it wants to do. Now here was a weekly chart of the E-mini coming into August. As you see here, all the bars were green, then we started to get a few more red. And then what did we get here? We had a bearish engulfing pattern, and bar number 2 was colored red. So this was actually at the end of July, prior to August. The market was telling us already, before we came up with all these reasons why China did it, or these hedge funds, or these high-speed computerized funds did this, or systems, before we had to justify it by saying that, the market was already telling us. In fact, it was screaming to us on a weekly time frame, I'm going lower. You may want to sell now and you may want to get short. Most people didn't take advantage of that, but our students and the members of our courses did, and we all took advantage of that 1,000-point drop to the downside, okay? Now that was on a weekly time frame going back in August. If we go further into October of last year, after the market bottomed out, a lot of people said, well, you know what, we're in a full-fledged bear market. We're going to bounce here for about a month and then we're going to fall out of bed again. So any bounce here, I'm going to short. I was speaking at a seminar in Las Vegas and a lot of people, this was at the first week of October, a lot of people were asking me what I thought of the market. And I said, well, I only listen to what the market is telling me. I don't give my own personal opinion because I actually have no idea what the market's doing. And they said, well, what is the market telling you? Well, I said, well, I apply the PET D and the colors are starting to turn green. In fact, we had a bullish engulfing pattern here the first week of October. So this was telling me that the market wants to go higher. So as you can see here, the market went up 160 points in 1 month. That's 160 E-mini points in 1 month. Now all the time as the market was going higher, people kept shorting and shorting, saying, well, when's the second sell-off going to kick in? When's this? And it just kept going higher and higher. And I said, listen, as long as the bars are green, I'm a buyer. When we start getting a confluence of red bars and I start getting some setups that are confirmed by the PET D, then I'll turn into a seller. Well, we fast forward into December. It's about a month or so ago. This is a 30-minute chart. As we see here on this 30-minute chart, we have a bullish engulfing pattern and the market goes up a little towards the end of the day, not a lot, but then it starts to roll over. And had you not taken any profits or gotten out here with a quick, 20 points or so, you would have most likely stayed in and you're still holding on, hoping a rally is going to start, but you would have been warned because there was a bearish engulfing pattern right here. So most likely, if you had still stayed in from this buy signal, you would have exited right here and broken even or lost a little bit. All right, but that's okay because remember, once again, it's all about consistency. 2 steps forward, 1 step back. Well, this could have been the 1 step back. Had you never taken any profits, you would have probably had a minor loss if you used this signal to stop and reverse. but that's okay because one step back and then one step forward. This time with a lot more gains, 50 points in 2 days, or roughly about $2,500 per contract. Now, that was going back last month on a 30-minute time frame. Let's look at what you could have done today, this morning. Now, unfortunately, I wasn't able to get the entire day because I was busy putting this presentation together, but let's look what happened in the first couple of hours of the day. I know a lot of E-mini traders like to only trade the first hour or two because that's where they feel the most action is, the most volatility. Well, if we were intraday traders today, we look at a 15-minute chart of the E-mini. As you see here in the lower left-hand corner, this is the 27th right here at the very bottom of this dotted line. So coming in, we gapped a little lower and then started to head lower. It looks like the market's going to be selling off, but then we get a bullish engulfing pattern here. Although it is rather elongated, oblong type, it's still a bullish engulfing pattern. Now, that's the market telling you that most likely we're going to have an upward bias. But you want to confirm it. How do we confirm it? By being in sync with the trend. And what's the best way I know by being in sync with the trend? We add the PET D. The PET D needs to color bar number 2 green, and guess what? It did. Bar number 2 is green. So roughly about 7:45 Pacific time, just roughly the first hour or so, hour and 15 minutes of the day, we were getting a buy setup on a 15-minute time frame using what I'm sharing with you. Okay, so this was the market telling us it's going higher, and look what happened. 20 points in 1 hour. Okay. So in the first couple of hours of the day, if you were lucky enough to stay in that entire time, that's $1,000 per contract. Now, sure, we're not saying every one of our students got out exactly at 20 points because we know the market changed later on, but you could have used that trade and maybe taken 10 points, made a quick $500 and said, boy, it's 8 o'clock in the morning. I think I'm done for the day. I made $500 today. What if you had traded 10 contracts? It's $5,000. You just see the consistency once you learn to listen to the market, and it's confirmed by the PET D. The PET D is just a translator. It's telling you what the market wants to do. It's confirming what the market wants to do. Okay, let's look at the Forex market as we go here to conclude, just for all you Forex traders, because it works in any market, in any time frame. Let's start out with the daily chart of the Eurodollar, okay? Now, this is more of a standard type, conventional type, because we look here and we've been in a small kind of a downtrend and we have a bullish engulfing pattern. So this kind of fits the conventional wisdom of trading, but remember, it doesn't tell us that it's going to be a profitable trade. We want to have a little bit more security. How do we get that security? Bar number 2 must be colored green. So we add the PET D, and lo and behold, bar number 2 is colored green. So this gives us the confidence to take the trade, and 600 pips in 3 days. That's $6,000 per contract, okay? Not a bad trade. Let's go to a different time frame, a weekly chart of the Australian dollar, going back to last June. We have a bearish engulfing pattern. Once again, it kind of fits conventional wisdom. We're rallying, and we have some kind of a top here. So most people would say this is a valid setup, but remember, we don't trust conventional wisdom. What do we trust? We trust the market. So how do we know what the market wants to do? We need our translator, the PET D. The PET D translate and tells us if we're in a downtrend. So we need bar number 2 to be colored red. So we add the PET D, and bar number 2 is red. So it's telling us the okay, it's giving us the go ahead to go short if we like. And on a weekly time frame, that's 900 pips in 3 months, or $9,000 per contract. And we can go out to a higher time frame. Let's go out to a monthly time frame of the dollar yen. This is going back to 2012 on a monthly time frame. Now, all the bars were red coming into this setup, but then we had a green bar, and it's a bullish engulfing pattern. But the market is confirming it. So had you taken that setup, that's 4,500 pips or $45,000 in the next 3 years. Once again, we're not saying you would still be in this trade, but all we're saying is that we're showing you the consistency of how strong you can be in sync with the market by using the PET D, along with a valid candlestick pattern, a way in which to trade the candlesticks. So let's recap before we go to questions and answers, okay? Remember, only buy or sell candlestick patterns that are in sync with the trend. What is the best way to be in sync with the trend? Well, in my nearly 40 years of trading, the best way to be in sync with the trend is by simply using the PET D. You don't have to question anything. You don't have to look at different time frames. You don't have to look at a ton of indicators. You don't have any lagging tools behind you. It's very fine-tuned. So you know on the next bar if it's going to be green or red. Okay? So the PET-D is the best tool I know for being in sync with the trend. So if you want to trade candlesticks with consistency, trade them in sync with the trend as opposed to reversal patterns. And if you want to be in sync with the trend, the best tool I know is the PET-D. Now, just points to remember before we conclude here. Firstly, what I just shared with you is not a complete strategy. All I shared with you was a very nice setup. In other words, an indication that the market is telling you what it most likely wants to do or doesn't want to do according to a candlestick pattern. But we didn't talk anything about, a complete strategy. We didn't talk about entry signals. Where would you have entered? Okay? We have tons of different entry signals, advanced entries for all of our strategies. Where would that be? Well, we didn't talk about that. How about stop placement? Remember, once again, nothing works 100% of the time. With this method I just shared with you today, this technique, it does not work every once in a while. You will have some small minor losses. Remember we said 2 steps forward, 1 step back. That 1 step back is your minor loss every once in a while. So you need to protect yourself. Where would you place stops? How about your exit? Where do you get out? Are you going to try and go for the full 25, 30 points the way we showed you with some of the examples, or would you want to get out 1 or 2 points? All right? How do you know where to get out? And then lastly, money management. How many shares, how many contracts should you use? Should you double up? Should you increase your share size? Should you diminish them? Okay? Should you be out of the trade entirely? Okay? We didn't talk about any of these things, and these are all extremely important pieces of the puzzle. All we shared with you was the first piece, which is just the setup, showing you that there's fertile ground here for a nice trade to take place. But that's it. We didn't go into detail about where to enter, where to place your stop, where to exit, how to manage the trade. So here's what we're going to be sharing with you today. It's our candlestick combo. It's strategy number 5, which is our candlestick strategy, our premier candlestick strategy, along with the PET-D tool. Okay, you're going to get instant course access, detailed instruction. I'm going to go into detail sharing with you all the entries, all the exits, and all the stops. You're also going to get signal alerts included. You're going to get the PET-D and 4 PET-D trading techniques. This includes both of the add-ons. So in other words, you're going to get the add-on that tells you when a signal has been generated. You're also going to get the add-on that colors the bars either red or green. Lastly, you have lifetime correspondent. You can contact me whenever you want. This is our 2016 New Year special. Now, what we do is you are my student now for life, and you can't get rid of me. I'm going to be your mentor for life. And what I want to do, once you become a member of our course, is have you really follow and learn how to spot these setups on your own. I want you to learn the entire process behind the strategy. But once you start to get that, we give you a little bit more information in terms of signals and in terms of how to deal with news. In fact, here's a perfect example with news. A lot of people, that's their first question. They say, Steve, I know what you say about not listening to news, but I'm sure you have to get a setup every once in a while, and then a bad news event happens and you lose a lot of money. Listen, we are in no way telling you that if you have to listen to news, if you feel you have to, that we're barring you from listening to news. If you really feel you have to, then go ahead. That's fine. We want you to be a part of the process. Remember, I stated in the opening statements that you have to make your own decisions, not some mentor or not some guy on TV or in a chat room. So I want you to use whatever makes you feel comfortable. All we say is that it's not required. And many times, our strategies and our techniques work in conjunction with the news. In fact, far times in advance of the news. In fact, let me show you something that happened recently. This was just a few weeks ago, or a few days ago, actually. I think Twitter shares tumble after execs exodus. So in other words, a lot of the executives were leaving the firm because the price and the company has been really doing so poorly. This was in Yahoo Finance. It said Twitter stock fell as much as 7% on Monday after investors reacted to the disclosure that 4 top company executives are flying the coop. They're leaving. In other words, the captains are jumping ship. Okay, so if we look at Twitter, the chart here coming into when that news came out, sure, it's been going back down rather poorly, and it's been really in a strong downward trend. Someone looking at this would say, well, Steve, yeah, in hindsight, it's easy to see you've been in a downtrend, but how could we have known as far back as here that we should get out of this stock? Okay, well, simple. if you would apply the PET D, you would have seen that way back, October, November, all of the bars were colored red by the PET D. So right off the bat, you know you're in a downtrend. If you're in a downtrend, do you want to be buying? No, you want to be selling. So right off the bat, you know you're in a downtrend. There's no reason you would be getting hurt by Twitter because you'd be looking to go short. And guess what? Strategy number 5 generated 4 great sell signals right here. A couple in November and a couple in December going into that news. So well in advance of this news, we were already having our members short using the candlestick combo. Now, once again, this comes with a lot of preparation. We want you to learn and understand this course and understand exactly what to look for. Once you finally understand what to look for, what we do is we furnish you with signals, because that takes you up to the next level where you start seeing actual signals that are generated and you use them as educational tools. So we will give you email alerts. Here's one that was generated on the 6th of January, just a few weeks ago. Here's a perfect example. And as we look here, circled in green here, we have Weight Watchers. And this is strategy number 5. This is the one we're offering you today. It was a sell signal using strategy number 5. So this is what you would be getting on the night of the 5th for entry on the 6th. So if we look at the chart, here's the setup. Okay, we have a bearish engulfing pattern, and this was on the night of the 5th. Now, if you were comfortable enough with this strategy, you could have said, well, okay, I guess, you know, it's a valid strategy to go short. The strategy does have a level of consistency, but I'm not really sure yet. I mean, what if we made some type of bottom here, and this is just a high level of consolidation, maybe a little pennant, and we're going to go higher? How do I have the confidence to take this trade? Well, this is the beauty of the combo we're offering today. You simply add the PET D. Remember, with any candlestick pattern, you want to see the setup bar colored in the direction of that setup. So if this is a bearish engulfing pattern, obviously we're selling, so you want to see bar number 2 colored red. We add the PET D, and once again, it's colored red. So that would have given you the confidence to take the trade just a few weeks ago, and the stock dropped 48% or 10 points in 2 weeks. All right. Now, we didn't know any news that was coming out in Weight Watchers. We didn't know, we don't follow the fundamentals of the company. We don't care what's going on. All we did was listen to the market. And you can see these on your own as soon as you start to develop and understand the process behind the strategies. So this is what we're offering you today. Remember, once again, this is our candlestick combo. It's strategy number 5, probably our best candlestick strategy, along with the PET D. All this included with lifetime correspondence. Okay, this is our 2016 New Year's special. Now, here's the way to get it. We're offering this at a really deep discount, a one-time down payment of $14.95, and then just a small $97 per month payment with that. Okay, that's all you need to do to get started, and we'll also help you set it up. We have a great tech support department that can also help you set up all of this. Now, if you don't want to take advantage of that deep discount and you just want to have one lump sum, you can purchase a lifetime access to the course for $29.95. So this is a great deal, because trust me, these prices are probably going up within the year. This is how popular and how consistent this candlestick combo is. So here's how to take advantage of this before we go to question and answers. Pro Trader Strategies is my sister site. They market and promote all of my courses and techniques. You can email them at trading@protraderstrategies.com, or you can simply call them and at 310-598-6677. Now, if you look at the very bottom, that is the link that will take you directly to the sign-up page, okay? All you have to do is copy and paste that, though, because it's not a live link. If you want to actually go to a live link, I believe they posted that. If not, I think they're going to post a live link in the chat box. Yes, there it is right there. There is a live link in the chat box. All you have to do is click that on, and it will take you directly to the sign-up page, all right? Now, if you want more information, possibly about payments, the payment plan you have there for the down payment of $14.95, or more information about the candlestick combo, or if you already have the PET D, but you want to pick up strategy number 5, or vice versa, all you have to do is contact Pro Trader Strategies. And they'll work with you. They're very easygoing. They'll put together something for you that will meet your needs and your payment structure, okay? So I'm going to leave this information up so you can contact them at your leisure, and I'm going to open up the question and answer box. And I want to thank you for holding off, but you see the presentation went a lot more smoothly if we didn't stop every 2 seconds for questions, okay? Cindy asked, do you have a toll-free number? Cindy, I don't believe so. You know what? You may want to email them instead. If you could email them, you won't have to spend anything, and they can possibly set you up with a toll-free number or at least answer your questions there, okay? Let's see here. Frederica says, but trends have an end, and how do you locate it and be sure of it? Well, remember, Frederick, we're not concerned with the end or the beginning of a trend. We're just concerned with knowing that we are in sync with the trend. Remember, that is the way most traders trade. It's like we're always taught you want to get out of the top and get into the bottom, and that's just really silly. I mean, it's really silly to trade that way because that can most likely, it's only done maybe by 1 to 5% of all traders. It's much better just to say, listen, we've got a large trend here, and then along the way, you'll get these signals in sync with the trend. I mean, how many examples did I show you where the markets went up for weeks, if not months, all the time, either green or red bars? There were plenty of setups. You didn't have to get in at the very beginning of the trend or at the very end of the trend. All you had to do was know when you were in a trend. If you start trading that way, you'll be much more consistent. We do not need to know when a trend begins or ends. Okay? Frederick says, are you trying to say it's infallible? No, in fact, I never even said that. In fact, I said a number of times that the PET D is just a directional tool. In fact, as I stated a number of times, that nothing works 100% of the time. So I don't quite understand where you got that from. Can strategy number 5 be used for day trading? Yes, it can. In fact, I showed you how it was used on a 15-minute time frame today. Now, I didn't show you any day trading for stocks, but it works tremendously for day trading stocks. And it works in any time frame in any direction. Okay. We have forex traders. I know there's a forex trader out of Texas that only uses it on 5-minute forex currency pairs, and he just loves it that time. We have other people that only use it for weekly bar chart. So it's up to you. Remember, it's your decision. There is no one way to trade this. I know we've all been taught, and everyone says I have the perfect system, the perfect strategy, and here's what it is. You have to trade it in this market only. It has to be this time frame. It has to be in these conditions. We don't believe in that. I want you to make your decision. We're giving you all the ingredients, but then you format it to make you feel comfortable. If you want to trade it intraday, great. If you want to trade it monthly bars, great. I've just tried to show you examples in all markets and all time frames just to give you the impression so that you know that you don't have to be stuck with one market or one time frame. Okay? Let's see. Anusha asks, would the strategy work if I use the 50-day moving average to determine trend direction and then look for an engulfing pattern to match the trend? In other words, in a downtrend, I see a bearish engulfing pattern, so I sell. Yes, that would work fine. It won't have, in other words, what this person is asking is, let's say price is above the 50. That's one of the tools we use for determining the overall trend. So yes, that would work well if you only look for bullish engulfing patterns. That would work well. Not great, but well. Now, if price were below the 50, that will work well if you look for bearish engulfing patterns or for, dark cloud covers or for dojis, things of that nature. That will work just as well. But remember, you're going to get a higher level of consistency if you add the PET D. That's all we're saying. The PET D works great. Just the way, using an oscillator would work okay, but it's not going to be as good as the PET D. I'm just saying this from experience. So if you want to start trading candlesticks in sync with trend tomorrow, sure, you could do that. And you'd have some nice results. You won't have, in my opinion, results as good as with the PET D. Okay? Let's see. Naresh says, are the strategies work on intraday charts? Yes, I already answered that. How many bars determine trend rising, falling? Well, the PET D, is a proprietary formula, and it doesn't really concern itself so much with bars. It's a proprietary, so it works more looking at momentum. So it's not so much concerned with how many bars. It's up to you. If you're looking for a generic way, that would be your decision. Some people like to say, well, if I see 10 bars in a downward motion, that means that we're in a downtrend, or 10 bars with an upward bias, that means we're in an uptrend. That's up to you. Some people want 20 bars, some people need 5 bars. That's purely discretional on your part. If you want something really more fine-tuned, the PET D just will show you in 1 bar, okay? Teresa asked, do you look at the PET-D on a single time frame? No, I look at it at multiple time frames, and I look at it in different charts as well. I look at range bars, tick charts, daily bars, intraday. So it absolutely makes no difference. Okay. Victoria says, very nice presentation. Oh, thank you, Victoria. Super clear. I see a lot of these engulfing signals follow a doji. These are so easy to see, and the PET-D really points out the obvious. Yes, it does. I mean, Victoria, we tried to show you a ton of setups just to show you that we're not just cherry picking. And then I even showed you something that happened today. It happened, this morning. Once again, I think as the gentleman stated, we never said anything is infallible or that it works all the time. We just said that there's a very high level of consistency. I think I said that in the opening statement, that we're looking for consistency. Nothing is 100% foolproof, but when you have consistency, instead of trading the way I used to trade, which was 1 step forward, 5 steps back, we're looking for 2 steps forward, 1 step back. And that's what I think the candlestick combo gives you, because strategy number 5 by itself is a great strategy. It's a very good strategy. But when you add the PET-D with it to confirm it, wow, you've really amped up your odds for success by increasing the consistency. Okay. Teresa says, so in other words, if you trade on a 1 hour time frame, do you need to look at a daily time frame of the PET-D? Oh, I see, Teresa. No, I mean, once again, you can if you want to. I'm never going to sit here and tell my students you have to trade this way. That goes entirely against our philosophy. But it is no way required. Just look at the chart in front of you. I have one screen in front of me, and it's just the chart I'm looking at. If I'm trading a 5-minute chart of the E-mini, that's the only thing I'm looking at. I don't care about what the daily is doing, what the weekly is doing. I don't care about what bonds are doing. They make no difference to me. My mentors told me this, as Steve, there's no consistency in that way of trading. There's no proof that that really works. Now, if you want to trade that way, if you really feel you have to, go ahead. But there's no requirement to trade that way. Why overcomplicate your trading by looking at tons of charts, looking at tons of news, being in trading rooms, chat rooms? Life is a lot simpler and easier, and trading is a lot more basic when you just look at one chart. That's the chart you're trading. And that's all I do, and I've been doing that for over 30 years now, and it's enabled me to trade for that period of time. When I first started trading, I traded the way 99.9% of all traders trade. I was looking at every news. I was a news event. I had tons of indicators. I couldn't make a decision until the news came out. I was looking at different time frames, different markets to validate what my market was. I mean, it's just ridiculous. And guess what? None of it worked for me. So I was lucky enough to have my mentors say, Steve, listen, you don't need that stuff. And once I let go of it and released it, that's when I started to become consistent. So that's all I'm trying to pass on to you. Okay? I want you to make your own decisions. I'm just trying to give you stuff that really has stood the test of time. Okay? You are more than welcome. Let's see. Neil says, your illustration circled the engulfing patterns. Does the PET-D also do that, or just color the candles? No, Neil, the PET-D just colors the candles. The PET-D is just the color bar tool. That's all it does. But the strategy number 5 in the combo comes with an add-on that gives you up and down buy and sell indications. So that will tell you when a signal is set up for a buy or a sell by either giving you, some type of a dot or some type of an up and down arrow. But remember, in the end, I don't want you to rely on these things. I don't use them. I've been using these strategies in the PET-D for ages. I don't rely on the up and down arrows. Sure, I need to look at the PET-D because it's a formula that I can't calculate every 5 minutes. So I just need the color bar tool. But after you've studied this process for a while, you won't need the up and down arrows. They're simply there for education, okay, to have you learn what to look for. Okay. Let's see here. What other candlestick patterns you showed in your list are they not as important as the engulfing? Frederick, no, I think the engulfing is probably the easiest and the most easily spotted. And it's the most accessible. I see these more than anything else. Remember, you can use them for anything, but I would rely mostly on the engulfing patterns. You are more than welcome. Let's see. Cindy is asking, does this apply with TradeStation? Yes, Cindy. I mainly use TradeStation, and it works great. Both these tools work great on TradeStation. So yes, I can wholeheartedly say TradeStation is great for both of these. All right. It also works if you're interested, if you have other platforms, the PET-D along with strategy number 5, you can get the add-ons for MT4, TradeStation, as we stated, Metastock, NinjaTrader, Sierra Charts, Interactive Brokers, FCXM, and Thinkorswim users can use free stock data to run the NinjaTrader chart platform for free. So in other words, if you have Thinkorswim, because of the way they're set up, they won't allow us to run our indicators on their platform. So all we do is, while you're still using Thinkorswim, you can just also use the data, the free data you're getting for that, and then have another platform running at the same time, which is NinjaTrader. Now, guess what? It's all free. We supply you with this, and we have a great tech support that helps you set it up. So there's really nothing you have to do. You'll just have an extra platform there that has everything with the PET-D and strategy number 5 for you, okay? Let me just go to the last couple of questions here before we exit. Next question is, do we provide data with the PET-D? I don't understand what you mean by data. If you're looking at some type of statistical data, well, that would be like saying, do you provide data for a moving average? I mean, remember, the PET-D is just a directional tool. It just simply tells you what direction to do. Then you apply a strategy or a technique in sync with that direction, all right? That's all it really is. There's no data to confirm or to go back and back test. Remember, we do not trade systems. I don't believe in systems because that takes you out of the game. As I stated in the opening statements, I want you to become a part of the process and make your own trading decisions. It's a recipe for disaster when you give your power away. So I want you to make your own trading decisions. So you have to be able to use this and then decide how you want to trade it, okay? In closing, you know, we're just towards the end of the very first month of 2016 of the new year. How has your trading been going? All right. Most people start out the new year all excited saying, okay, I'm going to do this. Boy, I've studied everything. I got a brand new course I paid thousands and thousands of dollars for. $5,000 is pretty much the going average these days for a system. And I'm all excited. And most people probably haven't still made any money in January. Okay. I'm not promising you you're going to make money because I don't believe in that. What I'm promising you is I'm going to be your mentor and be there with you every step of the way and show you things that I currently use and that have shown consistency and given me consistency in my own trading. So what I'm trying to do is just pass this along to you, giving you a great deal, $14.95, one lump sum, one down payment, and then only $97 a month, okay? Plus, you're there with me every step of the way. I'll be there trading with you. I'll be there answering any question you have for life. So if you're really having a difficult time, if you can't seem to get on board and you can't do anything, you know, all you have to do is come on board and I'll be your mentor. Now, I'm not going to tell you that all of our students make money. Most of our students, the very first month or two, have difficulty because they've never learned techniques such as this before. They get on board and they start having very much difficulty because they still want to hold on to what they believe. They're using a platform that they don't understand. They're trading techniques that they've never done before. They can't let go of news or they can't let go of trying to pick tops and bottoms. And therefore, their trading struggles. And I usually answer them in the emails. In fact, I answered a gentleman this week in an email. He couldn't understand why he was losing money. And then we went over all the setups and they were all done incorrectly. And I said, the reason why is because you're not following the rules. The rules are all incorrect. So once we went over everything, he finally saw, he goes, boy, I've been doing everything wrong. I said, yes, but don't worry. That's why we always instruct all of our new students to paper trade. So in the very beginning, you don't go into this large drawdown because you're letting go of preconceived and conventional wisdom, which you thought was supposed to work. We want you to go in smoothly, so we always suggest everyone to paper trade until you finally understand how it works, then you start applying real funds, okay? This is part of the mentoring, and this is what we do with all the people, okay? So, in conclusion, I just want to thank you so much. Remember, if you have any questions, contact Pro Trader Strategies. If you've already purchased one of these, say purchase Strategy 5 or purchase the PET-D, I'm sure they can work with you in putting together a great deal. You won't have to pay for the same thing twice. And remember, once again, think of your trading. Look back at your trading. If your trading is really difficult or you can't understand it or you're having difficult, come on board. We'll try to get you on track, okay? We'll try to do our best for 2016. Thank you so much for attending today. I wish you all the best of luck, and I look forward to all of you becoming students of mine at Specialist Trading. Thanks again. We'll see you next time. Bye-bye.